Hey everyone, and welcome back to the channel, The Solution Studio. In today's crucial video, we're diving deep into the world of cryptocurrency investing. With thousands of digital assets vying for your attention, how do you cut through the noise, choose the right coins for your portfolio, and, most importantly, avoid the ever-present threat of scams? This is your ultimate crypto investor's guide. Let's get started. The charm of cryptocurrency is undeniable, with the potential for significant returns. However, the landscape is also filled with projects that may not live up to their promises and, unfortunately, outright scams designed to part you from your hard-earned money. So, how do you navigate this complex terrain? We'll break it down into two key areas: choosing the right coins and spotting and avoiding scams. Building a solid crypto portfolio requires more than just picking coins with catchy names or those that are pumping in the short term. It demands research, understanding, and a strategic approach. Here are the key steps to choosing the right cryptocurrencies for your investment goals. Understand the fundamentals. The white paper, this is the project's core document. Read it thoroughly. What problem does it solve? What's the technology behind it? What's the long-term vision? A well-written, comprehensive, and realistic white paper is a good starting point. Use case: does the cryptocurrency have a real-world application or a clear utility? Is there a genuine need for its existence? Avoid projects with vague or non-existent use cases. Technology: delve into the underlying blockchain technology. Is it innovative? Scalable? Secure? What are its advantages and disadvantages compared to existing solutions? Tokenomics: analyze the token supply, distribution, and any mechanisms like staking, burning, or inflation. Is the model sustainable and fair? Evaluate the team and community. The team: research the individuals behind the project. Are they experienced and reputable in the tech, finance, or relevant industries? Are their identities public and verifiable? Look for transparency and a track record of success. The community: a strong and active community can indicate genuine interest and support. However, be wary of artificially inflated or overly aggressive communities that might be masking a weak project. Assess adoption and partnerships. Adoption: is the cryptocurrency being used by any real-world applications, businesses, or institutions? Are there tangible partnerships and integrations? Partnerships: look for meaningful collaborations with established companies or organizations that lend credibility to the project. Analyze market metrics, with caution. Market capitalization: while a high market cap can suggest stability, it doesn't guarantee future growth. Conversely, lower caps can have higher potential but also higher risk. Trading volume: healthy trading volume indicates liquidity. However, be wary of artificially inflated volume. Price history: while past performance is not indicative of future results, understanding a coin's price history and volatility can provide context. Consider the broader ecosystem. Ecosystem growth: is the project part of a growing and thriving ecosystem, such as DeFi, NFTs, or Web3? Developer activity: is the development team actively working on the project, releasing updates, and engaging with the community on platforms like GitHub? Unfortunately, the crypto space attracts its fair share of bad actors. Recognizing and avoiding scams is just as crucial as picking the right investments. Here are some red flags and strategies to protect yourself. Unrealistic promises and guaranteed returns: be extremely skeptical of any project or individual promising guaranteed high returns or risk-free investments in crypto. This is a classic scam tactic. High-pressure sales tactics: scammers often create a sense of urgency, pressuring you to invest quickly before you miss out on a limited-time opportunity. Legitimate projects don't rely on such tactics. Lack of transparency: be wary of anonymous teams, projects with vague information, or those that refuse to answer legitimate questions about their technology or operations. Pyramid or Ponzi schemes: these schemes rely on recruiting new investors to pay earlier investors. Be suspicious of projects where the primary focus is on referrals rather than a viable product or service. Fake ICOs or pre-sales. Scammers may create fake initial coin offerings, ICOs, or pre-sales, collect funds, and then disappear. Always verify the legitimacy of the project and the team. Phishing attacks. Be cautious of unsolicited emails, messages, or social media posts asking for your private keys, seed phrases, or login credentials. Never share this sensitive information with anyone. Fake exchanges or wallets. Scammers may create fake exchanges or wallets to steal your funds. Only use reputable and well-established platforms. Pump and dump schemes. Be wary of groups or individuals who promote a little-known coin with the intention of artificially inflating its price and then selling off their holdings, leaving others with losses. Social engineering. Scammers often use social engineering tactics to manipulate you into sending them money or revealing sensitive information. Be cautious of overly friendly strangers offering amazing opportunities. Check for red flags. Look for poorly written websites, grammatical errors, unprofessional communication, and inconsistencies in information. Do your own thorough research. DIY never invest based solely on someone else's recommendation or hype. Be skeptical. If something sounds too good to be true, it probably is. Verify information. Cross-reference information from multiple reliable sources. Use strong, unique passwords and enable two-factor authentication, 2FA. On all your crypto accounts. Be careful what you click. Avoid clicking on suspicious links or downloading attachments from unknown sources. Never share your private keys or seed phrases. Use reputable exchanges and wallets. Trust your gut. If something feels off, it probably is. Report suspicious activity. If you encounter a potential scam, report it to the relevant authorities and warn others in the community. Investing in cryptocurrency can be exciting and potentially rewarding, but it's crucial to approach it with caution, knowledge, and a healthy dose of skepticism. By understanding the fundamentals of solid projects and being vigilant against scams, you can significantly increase your chances of success and protect your investments. What are your best tips for choosing the right crypto and avoiding scams? Share them in the comments below. Let's help each other navigate this evolving crypto landscape safely and effectively. If you found this video valuable, please give it a thumbs up, subscribe to the channel for more in-depth crypto guides, and hit that notification bell so you don't miss out on future insights. Thanks for watching, and stay safe out there in the crypto world.